Hi everyone. Good morning. In 2016, we crossed an important milestone of $10 billion in revenue during the calendar year, so the last 12 months. Praveen told me that in 2004, we crossed $1 billion in revenue, and then $2 billion in 2006, right, Ranga and Praveen? And when I started, I remember we were just above 8 billion. So that 10 billion number is something that all Infosians and all our stakeholders and clients should celebrate. We had good performance in Q3, considering that when we entered Q3, we were facing both the traditional seasonal headwinds from less number of working days and furloughs, as well as the one-time impact that we had expected from RBS despite that, and we had 1%, a little bit more than 1% impact from RBS. Despite that, we delivered Q3 revenues of just a little bit below flat, minus 0.3% in constant currency. We improved our margin performance thanks to the efforts of our teams, especially Ranga, which I am very proud of, and to deliver operating margin of 25.1%. Utilization was at 81.9%. That is the highest Q3 utilization in many years, and consistently now for the 7th quarter in a row, utilization above 80%. And then in the new areas, we had strong growth. All 4 of our new dimensions in software-led services, Mana, Skava, Panaya, and Edge, had their best quarters ever. And Mana client adoption has continued to double quarter on quarter. So we are seeing good growth on all fronts. As we enter Q4, we are optimistic about Q4. We have raised our guidance on constant currency terms to 8.4 to 8.8% for the year, based on the outlook that we see presently. One significant thing that we saw in this quarter was the continued pricing pressure. RPP, the revenue productivity per employee, declined 1.1% on constant currency quarter on quarter, 1.7% for the first 9 months of the year, and 3.3% year on year for Q3, which tells us that this downward steady pricing pressure is something that is here to stay, and it's a reality for our industry, as I have been saying for the last 2.5 years. And despite that, our revenue per employee at the company level went up to $51.9 thousand. This is a result of a strong focus on automation, strong focus on operational efficiency, led by Ravi and his team, as well as agility in our hiring and how we have managed that. Overall, I'm happy with the performance for the first 9 months of the year, despite the seasonal circumstances that we have seen. So we did on a year-on-year basis for the first 9 months of the year, that is 9.4% improvement on constant currency. So that is something that I'm excited about. And over the course of the quarter, we also saw that our customer satisfaction has increased significantly. In fact, the customer satisfaction scores are at the highest level ever since we started the customer satisfaction survey 12 years ago. So that is something that all our employees are proud of, and it reflects our endeavor to execute on our strategy to bring innovation into every dimension of our operations, to make innovation a way of life for everyone inside Infosys. Strong adoption of zero distance, and zero distance itself has become quite a significant movement, part of all dimensions of our company, both from a revenue driving perspective as well as just elevating the confidence, the creative confidence of our employees. As I look to the future, an increasingly AI-led future, this embrace of AI in improving our operational efficiency and automation, as well as new AI-led solutions for all industries, is something that is going to be crucial to our future, and that is going to require the best of the imagination of all of us, and that is something that I am glad to see the markers of progress on all of these fronts.
Good morning, gentlemen, and Happy New Year. Vishal, just to get your thoughts on, you just conducted a survey of all your clients. What is the kind of client behavior changes that you have seen post Trump's victory? And do you see that that's going to impact the Indian IT companies and companies like you who are working extensively in the US? And for Ranga, the margins have gone up by 2 basis two basis points. Can you give us a idea of, is there further scope for expansion of margin as we go forward? And since Vishal was talking about RPC going down by 1%, what are the levers available at your hand to ensure that you are able to stem that fall in RPC, because that's going to be a critical factor going forward, and impact of cross currency changes, which is that.
So in terms of the new administration, the new president is going to take office next week, and overall, I expect that the President-elect Trump is himself an entrepreneur and a very business-friendly, innovation-oriented, has an innovation-oriented background. So I expect that the policies of the administration are going to be friendly towards business and innovation and entrepreneurship. So overall, I expect that if we can continue to focus on delivering that value, that innovation, things will be okay. Of course, visa policies and immigration-related policies may change, and we have to watch and see what happens there. So far, there is no discernible pattern in client behavior. Many clients have reached out to because everybody is trying to figure out what these things mean and so forth. And but I wouldn't say that there is any noticeable discernible pattern. So as we see the policies take effect and so forth, of course, we will let you know. We are what is it called? We are waiting and
watchful mode.
Watchful mode. Yeah, we are waiting and watching.
Hi, on the margin front, this has been a positive quarter. If you look at the operating margin, it expanded to 25.1, which is the highest in this year. Likewise, the net margin also expanded by 60 basis points to 21.5. So I think overall on the margin front, even if you look at the 9 months over 9 months, this year it was 24.7, pretty much same as last year's, despite the lower revenue growth. I think on the margin front, as you were saying, well, yes, even in this 9 months, if you look at year on year, the pricing decline was 1.7% in constant currency. So despite that, we are able to kind of maintain the margin at the same level as last year. In October, we had clearly said that our operating margin range for this year would be 24 to 25. So we're pretty much at the higher end of that particular band as of now. So coming to the levers that you talked about, we have multiple levers that we have kind of continuously utilized over the last 7 quarters. For example, utilization consistently above 80%. This quarter also, despite the RBS headwinds, typically it brings down the utilization lower in a seasonally soft quarter. So we have been able to keep a healthy utilization. Then if you look at the on-site employee cost as a percentage of revenue, has come down this quarter. Likewise, on subcontractor costs, we have stabilized around 5.4, 5.6 range. Likewise, these are particular levers that we have utilized in the past, and we continue to optimize those levers. At the same time, there is one more lever which has not improved much, which is the on-site mix, which is still at 29.8, and we do believe that we need to work on it, and we will work on improving that lever as well. So overall, in spite of the pricing decline of 1.7% in constant currency over 9 months, we have been able to keep the margin, and the margin has expanded this quarter. And most importantly, the operating cash flow has been very healthy. It is at 100% of the net profit.
Happy New Year, gentlemen. Rukmini Rao from CNBC TV 18. Vishal, want to understand from you in terms of the noise around H-1B visa. How big a headache is that for Infosys at this point in time? And also, you've crossed the 10 billion mark run rate. So, in terms of your aspirational 2020 goal, do you think that this is making it look much achievable at this point in time? And Praveen, just want to understand from you the next growth wave where is that coming from, given the fact that most of your businesses and also services, they're either doing flat or marginally well? And Ranga, also in terms of the currency movement, just want to understand from you, is there any game plan that you have currently? And last question, Vishal, the management change that we've seen, bringing in Ravi Kumar as the deputy COO, is there a larger game plan? Are there going to be more management changes going into FY18?
Sure. So, wow, there were lots of questions, Rukmini. I think first of all, what was your first question?
On the visa.
The visas, yeah. See, we have quite a bit of H1Bs, and we also have lots of local hires. And Ravi has been working furiously in the last few months to do something that we had, as you remember, 2.5 years ago when I joined, I had articulated anyway that we have to become much more local and locally oriented in our strategy in the markets and globally. I am myself a senior local hire in the United States and a US citizen. So ultimately, regardless of the visa policies and so forth, the right thing to do for innovation is to have a lot of rich local talent. That's something that Infosys always believed in, and is something that we are absolutely committed to. So there will be some impact of the H1B depending on the nature of the policy and so forth that is enacted. There can be, but it is something that we'll let you know when we figure it out, and it is not something that we are overly concerned about. Regardless, we have to focus on next generation collaboration technology. Sanjay, our head of design, has been working on a next generation visa-free global delivery model where we bring collaborative technologies to bear in creating a rich experience for people to work together in new kinds of workspaces and so forth. So that is I think the bigger view on that. In terms of the crossing the 10 billion, that is a huge emotional, psychological milestone for us. And yes, of course, our aspiration continues to be 20 billion, 30% margin and $80,000 revenue per employee, and that is something that we are absolutely working hard towards. And what good is an aspirational goal if it is not aspirational?
Okay, on the growth perspective, Q3 is a seasonally weak quarter, so I don't think we should read too much into individual service line or geo-wise growth. I mean, if you look at financial services, despite the headwinds of RBS, we have seen on a constant currency basis 0.2% growth. So the pipeline is healthy in financial services, so we expect that to continue going forward into Q4 and next year. Manufacturing seasonally, because of furloughs and other things, we have seen about 0.6% decline on a constant currency basis, but it's expected to kick back. And within manufacturing, we are seeing good traction in auto. High tech, we had a challenge this quarter, but next quarter we hope that it will bounce back. Aerospace is probably the only one which is a bit challenged. When you look at retail and CPG, retail continues to be volatile. So we will see some ups and downs in retail because it's tightly linked to consumer spending, consumer sentiments, and so on. But on the life sciences side, we have seen some good growth this quarter. We expect it to continue. If at all anything, in my mind, energy is probably the only one which is probably relatively soft. Otherwise, while this quarter we have seen some degrowth even in telecom, but going forward, I think barring energy, we expect most of the sectors to bounce back.
So on the margin front question, clearly this quarter both the operating margin has been positive, net margin has increased, as well as the operating cash flow. Operating cash flow has been 100% of our PAT. So I think even if you look at the 9 months, over 9 months, the operating margin at 24.7 has been steady despite the reduced revenue growth. Coming to the foreign currency question that you had, well, sequentially, I think the foreign currency fluctuations impacted around 1.1%. That's the difference between the constant currency and the reported. If you look at this particular quarter, there has been extreme volatility in all the currencies. USD especially appreciated very strongly, over 5% on GBP, close to 5.8% in Euro, and even on Australian dollar. But we have consistently used our hedging, as our hedging policy has been very consistent. This has helped us to navigate this extremely volatile currency environment much more effectively, and we'll continue to watch. I think in the near term we do see certain volatility continue both on the rupee front as well as the US dollar and the other cross currencies. We'll continue to monitor that.
And Rukmini, on your last question about the organization, of course there will continue to be changes. There is no particular grand plan. We are very, I mean, Ravi is just amazing. He's an extraordinary colleague, and if you just look at our scale that we operate at now, it is massive, more than $10 billion run rate, and thanks to all the efforts of everyone. So Praveen and I need more bandwidth, and Praveen told me that with now Ravi being deputy CEO, I have to stop calling him after 10 o'clock at night. And so for sure there will be more changes, but there isn't any particular grand plan. You know, Steve Jobs used to say that you can only connect the dots looking backward. So I deeply believe in that, and we say things as we see them, and we take decisions as we go forward. That is the hallmark of an agile organization.
Hi everyone, Chandra from ET Now.
Hey Chandra.
Vishal, a couple of quick questions. You know, the TCS management yesterday spoke about how US BFS is looking up now that, you know, the elections are out of the way and they expect clients to spend more going forward. Do you see similar trends as well, though this quarter it hasn't done too well? And also your quick comment on N. Chandra taking charge of Tata Sons, because everybody is saying this is advantage Infosys in the near term. Praveen, a follow-up on Ravi Kumar. Does this mean that, you know, gradually he will transition to the COO role? How long are you going to stay on? And Ranga, a lot of analysts expected a buyback announcement this quarter because a lot of companies see it as very tax efficient. Is this on the cards at all for Infosys? Thank you.
Wow. What was the first question, Chandra?
US BFS looking up and also on N. Chandra.
So all BFS is looking up simply because I have tremendous confidence in Mohit's amazing leadership ability, and he has, if you look at our BFSI performance and now also healthcare, that is his responsibility, it has done exceedingly well. Despite this RBS impact of more than 1% on the company level, our BFS still grew in Q3, so that is we are very confident. I think generally we expect that the shift of spending in BFS will move from a more regulatory oriented and cost oriented approach in the prior times to now certainly in the North American market with President Trump coming in towards a more innovation oriented and lower latency, new technologies, new kinds of growth areas and so forth, and banks will focus on those. So I am confident. Mohit would normally say cautiously optimistic, but I am very optimistic about the BFSI and our prospects there. And in terms of Chandra becoming the chairman, I wrote him yesterday congratulating him on the great, it is a reflection both of his amazing leadership and capabilities, as well as the growing importance of software in the world around us. So, you know, all the best to him, and we wish him the very best in that journey.
Yeah. See, on Ravi, as Vishal said, I mean, basically he has done exceedingly well, and historically we had a lot more senior bandwidth based out of India, and our businesses continue to grow and be much more complex. So we needed more bandwidth here, and so that's the primary reason.
And Jayesh, you know, Jayesh has a deputy CFO to Ranga,
Yeah.
and so Praveen is has now a deputy with Ravi. So this is how we are setting it up.
Anyway, I'm not in a hurry to retire or anything, still a long way to go.
No, I will not let Praveen retire anytime soon.
On the other question, Chandra, on the capital allocation policy, if you look at in April 2015, the board had evaluated the capital allocation policy about 2 years ago, and at that point in time, the dividend payout was increased from 40% of profits to 50% of profit. If you look at today, at 50% of net profits, it almost works out to over 70% of the free cash flow. Yes, the board periodically evaluates the capital allocation policy after taking into account the strategic cash needs, the operational cash needs, and evaluate all options. And I think the board will kind of will consider at an appropriate time the capital allocation policy. So it was done in 2015 April.
So is this the time, an appropriate time?
I think it's board will consider periodically, and it will look at what is the appropriate time to consider.
Maya Sharma from NDTV.
Hi.
President Trump about to take over. The world is waiting with bated breath to see what he does next. And of course, IT companies, including Infosys, a huge presence in the United States. With all the fears of the visas, with the stress on American jobs like your own, what really is Infosys thinking about the presidency going ahead? Is it cautiously optimistic? Is it fearful? Or what is the real term?
No, as I said, if you look at the career of President-elect Donald Trump, it is a career based on innovation, entrepreneurship, business success. So I expect that and if you look at some of the indications that we have seen in the last couple of months, it all points to a more business-friendly, innovation-friendly, at a general level. So therefore, if we focus our long-term strategy towards continuing to deliver client value, to not be focused so much on cost-based delivery of value, but on innovation-oriented delivery of value, and are relevant to the client's business and growth, especially in these difficult times of our clients transitioning to digital, will be fine. And there will be changes we expect that there will be changes to the H-1B policy and so forth, and there can be impact from that depending on what the kind of policy is that is put into place. So we'll address that as we understand it better once it is in place. But in general, my direction, Praveen's direction to our company is basically to continue to focus on becoming more and more relevant strategically to our clients, and to be looking forward, not backwards.
So overall, his business-friendly approach may overrule the apparent anti-outsider feeling that he generates.
Yes.
Thank you.
Hello, Madhu from BTVI. Why are you changing guidance every quarter? There was an upgrade, then downgrade, now narrowing down to the guidance.
Let me answer.
Ranga, you want to?
No, actually, let me correct that. Every year we give an annual guidance based on what is the visibility we have at that point in time. If you look at not just us, some of our peers also have kind of assessed the guidance at the end of every quarter based on what they see, and they have revised the guidance downwards or upwards as the case may be. So this is not something unique to us. Our peers do it, and we have done it in the past, and it is primarily based on setting an expectation based on what we believe as a management team at that point in time and what we see in the markets at this point in time. We do believe that transparency is important, that asymmetry between the external world and what the management knows is important, and we have consistently followed this policy since we got listed in 1993. I think there is no deviation of this transparent policy.